Okay, traders, I'm back. I'm back with a live session. I'm going to trade NASDAQ 100 before the open. Actually, the market's going to open. New York session's going to open about 9:30. It's about 9:20 right now. So what I'm going to do is mark up the chart really quick to see if I can get into a trade based on my setup. So this is the daily time frame. So typically what I'm going to do is take the daily candle of yesterday and mark that up and wait for any breaks of the highs or the lows, and we're going to put a line right smack in the middle. Okay, and reduce my trade amount. Sure, to about 0.50. Okay, now from here I mark the high, the low, and also the close. So the market closed right there yesterday. Okay, then I change the color so I can remember my parameters. Okay, and then the middle line is just the middle line here. Alright, so we saw that it actually came towards the middle line and bounced off. So what's the overall trend? We see, based on this chart, the overall trend is bullish because right here it broke and created a higher high right there. Okay, so that candle is higher than that candle here. So that's a higher high. And what caused that high was this low right here. Alright, so we're bullish because it didn't come down and break this line here, so it didn't change the structure of the market. So we're still in a bullish structure on NAS 100, and then I take the trend line. I go from the bottom to the top. Like this. Like 1 or 2 wicks are hitting it. So this wick, this wick, this wick, this right here, like this. Okay, you got this wick hitting it as well. All right, so it's bullish. So we should see market trending higher. Okay, we got 7 minutes before the market opens. So I'm gonna go down to the lower time frames now, 4 hour. To see if I see any fair value gaps. And I want to mark out 9 o'clock to 9:30 or 9:20, because this is going to be like the 1 minute strategy that I'm going to try to do here. Alright, 9 o'clock, go down to the 5 minute. And do 9:29. Should be on the 1 minute. Okay. Alright. So we're looking for the market. I'm going to create the highs and the lows here as well. Okay, now if you guys haven't subscribed to the channel, you can go ahead and do that now. Hit the bell button, that way you get notifications of future videos. I'm going to do a lot of these live sessions, that way you guys can see what I do and mark up the charts the same way you want to mark up you can mark up your charts the way I mark up my charts if you wish. Don't necessarily have to, but this is what I do. So from 9 to 9:29, I'm looking for the market to either break this high or break this low. If it breaks a high, it needs to go above it, come back, retouch one of the fair value gaps and go back up. And the same with the lower aspect. So right now we're trending lower here. So this is pretty much a retracement. So I'm looking for the market to break these levels to go higher because this market is bullish. So we have 5 minutes before the market opens. So if I grab this tool here, market structure, change of character, we see that the market has changed character, break of structure, so it's trending lower, right? So I don't want to take any trades, you know, a sell trade. I want to focus on buy trades because according to the higher time frames, the market's trending higher. So we need a break. Okay, we need a break. I'll put my key levels here. We need a break of this high, a break of this high, a break of this high, a break of this high for a market structure shift. So if the market opens, which is going to open pretty rapidly, but most likely it's going to gap up or gap down. I don't know. Nobody knows. But if it gaps down, I don't know. Well, I just got to see what's going to happen at 9:30. But I want it to do this, like this, break these highs, to come back and possibly create a fair value gap somewhere down here, and then bounce off and go like this. That's what I would like to see, but will it show its hand? I don't know. So we'll have to wait and see. All right, so okay, so it broke this low, so I'm gonna need to put that right there. So any one of those breaks is what I'm looking for. All right, so market's opening in 3 minutes. Actually, 9:27, 2 minutes and some change. But it is trending lower, as you can see. This is all a downtrend. Okay. And we're just looking for a break of this trend line here going forward. And I'll be trading again at 10 o'clock. So I just want to see what the open's going to be at 9:30, because it might gap up and I might take a quick trade for a 1 minute trade, in and out in 1 minute. See if I can profit from it, but I gotta choose the right direction. If not, it's gonna be a loss. So we just gotta be patient enough to find out. Will the market trend higher at the opened, or will it continue to trend lower? Okay, because over here we have nothing over here. Okay, so we have just found some liquidity right here. I'm gonna mark that red. Okay, we got 1 minute before the market opens. So it might be coming down to this liquidity and then bounce off of it. Actually, is that the liquidity? Look at that. So typically what happens, it bounces off liquidity to go back and get those orders that was left behind. And yeah, so we are waiting for the market. 36 seconds. Well, it's 9:23 and 40 seconds. 20 seconds to go. So reading the candles, I don't see anything right now. market's open. Okay, so a gap down. Okay. So nothing really. No trade. Still gapping down. Also keeping a close eye on gold. Because gold open at the open. Price on the 30-minute. I have my pip juice on it. So it already hit TP1 and it's about to hit TP2. So I pretty much missed this trade right here. Okay, because now it's retracing back. That's okay. Let's go back to NAS. And that's an indicator that a CashX is offering to the students. So if you guys want to get access to that indicator, it's a phenomenal indicator. All you got to do is sign up to become a student with CashX. And you can download this tool, this indicator called Pip Juice, onto your charts. So once you put it on a chart, you know exactly what's going on. As far as if the market comes down here, you might want to place an entry and then shoot for TP1, which is here, to shoot for TP2, then shoot for TP3. So it takes the guesswork out of where your take profits are. It also takes the guesswork out of where you need to enter. Okay, so it's a great tool, but you got to make sure that you're on the New York session. So inputs, New York session. Okay. Okay, so that's pip juice right there. 30-minute time frame. Let's go back down to the 1 minute. Okay, so I may have, so there's no trade really, because it didn't give any bullish engulfing candles or anything that would motivate me to get into the trade right now. Just like it's going sideways, which is a consolidated effort here. This is consolidations in a box. You don't want to trade in a box because it bounces back from the top and bottom of the box and you really can't make any money. It'll just mess you up. So avoid consolidations, sideways trades. Okay, so I'm gonna mark up my chart for 10 a.m. because there might be a trade at 10 o'clock. So 10 a.m. to about 11 a.m. and I'll be back to see if I can place a trade there. So sometimes the best trades is no trades because it's 10 a.m. Stretch it out to 11 a.m. So I'll be back on here to see. It's getting close to the entry for pip juice here. So let's see. Alright, so it's about to hit the entry for pip juice here. Let me see. Would be right there. But as you can see, it's retracing. It's going back. So it's out of the box, as you can see, that I created. So it's more like a breakout. Could be a breakout of the box. is also going back inside of the box. So it's like, yeah. Then you have like a doji candle right there. Alright, so let's mark up that doji candle and see if it'll go below it or above it. And just take a closer look at that. We'll mark that up. Make it black. Okay, so if it goes below the doji, that means I'm going to put a trade in for a sell, because it didn't. By then, I'll probably hit the pip juice entry for a sell, and then we will shoot for the first TP, which is right here. There you go. I'm in for a sell according to the entry, and this is going to be the first take profit, so we're going to mark that up. So TP is right there. Confirm. That's going to be a quick trade. Alright. I lowered my lot size, so I didn't want to trade heavy on this one, because usually on a 1 minute trade it's like really fast. So alright, so it's getting close to TP1, up $4. If it hit TP1, the platform says I'll make $10. So let's see. And then the stop loss, of course, is above the candle. So we'll go ahead and put that on there as well, like this red line. Coordinates. Copy. This way you protect your principal. Stop loss. Copy paste. That's the stop loss. Okay. I'm going to move the stop loss to about right here. So if the trade goes against me, I'll only lose $20. Should I move the TP to take profit too? Nah. Okay. -11. Alright, so this is a challenge account that I'm on. $25,000 challenge account. I'm already up $523.35. I need to earn $27,500 to pass the challenge. So far so good. So it's getting really close to my stop loss. So most likely it's going to stop me out. Once you set the stop loss, you don't really want to change it. Yeah, and stop me out. That's it. Okay, so -$20 on that trade. All right, so happens, right? I can't win them all. I mean, I can get back in. It always does that. It hunts your stop and then reverses and go back in. Let me go back in and see what happens. placed 2 trades. I'm back in, and $12, 15, 16, 10. It may go against me, but hopefully I'll hit that TP area right here. There you go. It hit it, but silly me, I didn't set it. So 20. All right. So I got back to $20. Let me tell you how much I made on this trade. Okay, so my equity went up a little bit, so it's $25,527.66. Before it was $25,520. I lost 20 bucks, so I got back to 20, but I made an extra $7.66. I mean, it is what it is. But look, if I would have kept the trade going, let's see. Okay, so there it is. It hit TP1, which I was able to get back to 20 bucks that I lost, but an extra $7, so like a $27 trade. So not too shabby on that. So I'm going to continue to monitor this. I'm going to stop the video now, come back at 10 o'clock. It's 9:44, about to be 9:45. And then we'll go ahead and do the 10 to 11 o'clock session, which is going to be the ICT session, trading strategy, where you wait for a fair value gap to be triggered. And once you find a fair value gap and it comes back to the fair value gap, you place a trade, and I'll be discussing that with you guys in a couple of minutes. So let me close out this session, and it was a win. I mean, 2 things there was, number one, I placed 1 trade. It stopped me out because of the stop hunt. Then I went back in and placed 2 trades, and both of those trades were winners. And now I'm up an additional $7. So I got back to 20, but made an extra 7. So it was a win altogether. So very conservative. We'll probably be a little bit more aggressive at 10 o'clock. So see you then. Bye for now. Okay, traders, I am back. It's 9:59 a.m. 10 o'clock is the next trading session for me, and I typically stop at 11. So from like 9:30 to 11 is when I actually come into the market to see if there's any opportunities, looking for, of course, an A1 setup or any type of trade that coincides with my trading plan. So as we can see right now, the market did hit my take profits. I was able to profit off that first trade. We're gonna be a little bit more aggressive on this particular trade because I like trading this session 10 to 11. So we'll see what we can find here. So right now, 10 o'clock. It just hit 10 o'clock, and as we can see already, there's a bullish engulfing candle happening right there because we had a doji candle right here. So I'm going to mark that up right there. And see if it closes above that doji candle. Oh, it has other thoughts here. Might want to go back down and hit TP2 based on, actually that was the entry, TP1, TP2, TP3. So I did hit TP2 based on pip juice. So let's go back to pip juice. It did, see, it went blue past TP2. Now it's about to hit TP3. So not taking a trade yet because I'm too late. You don't want to get into a trade towards the end of the trade. So going back to the 1 minute, and now we're just going to be waiting for a break of structure. Come back, break of structure, looking for a fair value gap to be created. Okay, so this is 10 o'clock, this is 11 o'clock. Looking for a break of structure. Okay, which is this high right here. If you can break above this high, right there, take this line off. Okay, so it blew past CP3, look at that. So it's probably coming down here to this key area right here. It probably will bounce off of this key area. So let's just see what it's gonna do. Got my cup of coffee, and this is what I do. Every day during this time, I look for opportunities in the market. I'm looking for an A1 setup, and I can pretty much graph it out and let you guys know what I'm looking for. So this is the high, right? I'm looking for this to happen. So it looks like it may come down here. So if it comes down here, I want it to bounce off here, break these highs right here, right? Break the high, and then somewhere down here there'll be like a fair value gap, and bounce off the fair value gap and go higher like that. Okay, so if this happens, we'll take the trade at the fair value gap. Okay, so let me take this stuff off, and we're gonna patiently wait to see. Okay, if that actually happens. Now remember over here was the like a doji almost, and usually you take a trade at the bottom of the doji, so just stop loss above, and that would have been a winning trade, like a short little trade, but I didn't take it. So I'm just waiting now. I'm gonna take this off for a break of this high. Okay, and we're gonna mark out the fair value gap if it leaves one behind, so stay tuned for that. Oh, just got an alert from a CashX. Let's see what they're looking at. They're saying to sell US 30. Put a sell. I don't trade US 30, so I'm gonna ignore that trade alert. I only trade you know, gold and sometimes GBP USD and EUR USD. I normally trade those three pairs. So I'm going to go ahead and ignore the trade alert that I just received on my smartphone. And as we can see, the candle is trending higher, right? So again, we're looking for it to break this area here, which would be a market structure shift. So remember, we always look for a fair value gap, and it just created one. 3 candles where the middle candle separating the 2 wicks. And I just found the fair value gap. So I'm going to mark that up. Okay. And it came back down and hit the fair value gap, but it didn't make a higher high, so this is not valid for me. So there's no trade yet. Okay. Alright. It is sloping downward, so it might, come down in this area here. But that was a fair value gap. Okay. Get a little lighter. Okay. So we continue to wait. this strategy is a strategy that I learned from, I don't know if you guys are familiar with ICT concepts. This is one of their strategies that they have online, and I was able to watch a couple of videos on this strategy and add it to my trading plan. But if it doesn't break above, I'm probably not going to take a trade. Okay, because right now I want to plot out where the fair value gaps are. Okay, so that was a fair value gap. See, I was actually right on where I placed that fair value gap. Okay, that's like a confirmation. Okay, but there was a fair value gap up here. Okay. These fair value gaps that you see in red, it's for it to, continue its journey. So if it goes back up, let's say, does one of these numbers, it'll, like it did right here, it bounces off that fair value gap and goes down, right? What I'm waiting for is a change in the structure, because right now it's bearish. This video might be a little long because we are 8 minutes in within the hour there, and I'm not going to take a trade unless an A1 setup appears, unless all my confluences are in place, my confirmations are in place. So half the battle of trading is being patient enough to let the market do what it needs to do. But in your mind's eye, you set traps. You say, okay, if this happens, then I'm going to do this. If that happens, I'm going to take a trade. If that never happens, you sit on your hands and you do nothing. And by doing nothing, you save money, trust me. Because it's all about money management, protecting your principal. And you don't want to get into a trade blindly. Because when you do that, you're just going against your trading plan, and you don't want that to happen. Coffee's hot. Anyway, so we're still waiting. Stretch out that fair value gap, but as you can see, it's continuing its journey lower. You probably say, well, take a trade going down. No, I want this, I want to follow the higher time frames, because once the structure of this market on a lower time frame aligns with the higher time frames, that's when you know you're in a winning trade. Okay, so you don't want to trade against the higher time frames. If the higher time frames after your analysis say bullish, and then the lower time frames say bearish, you wait for the lower time frames to change its structure to mirror the higher time frames. And when that happens, you have a good opportunity of winning the trade based on your trading plan. So it's pretty much bouncing off this area. Okay, because you have a double bottom. I don't know if you guys see that. These two wicks hit that pretty much were exactly the same for a double bottom. You see that? That's a double bottom right there. Okay, so again, I'm waiting for a break of structure, because this was considered a lower high right here. Okay, or lower low, I should say, a lower low. This was pretty much, it didn't make a lower high. And you see what it's doing, right? So instead of making lower lows or lower highs or higher highs, lower highs, it's consolidating. It's creating a sideways movement. And again, you don't want to trade this. Stay away from it. Okay, now look at that. It hit that line again. But it's blown right past it. Look at that. Okay. Made a lower high. So it broke out of the box. And it's going to hit this area here, which is a key level. So I'm going to take these out. Almost. Because all this has been mitigated. Now it's breaking past it. Okay. But I'm looking for a bounce off this key area. So let's see if it does it. So the breaker structure would be up here, where the red line is. And you look for a fair value gap. The value gap will be plotted in green. Okay, so we're 13 minutes in. And look at that. It's breaking past this as well. But usually it just peeks its head out a little bit to go after the stops, because there's a lot of stop orders. People who place their stop orders will probably be like right here. Okay, and it's hunting for those stops. This is how the market makers make their money. Once they stop you out, that's when they make their money, because you're no longer in the trade. So people who thought they can get into a trade right here to go up are being stopped out. Sellers are right now in control. So next stop in its journey, it's this fair value gap right here. Look left and you'll see what that is. It's this area right here. Okay. Well, we also got our pip juice on here, so you know it might get closer to the areas to take a trade. If it does come down here, I'll consider taking a pip juice trade. So let me plot that out. 1. 2. 3. Okay, so the entry is this one. This is the entry. We'll make that green. Just in case it comes down here, touches that entry, it'll, hopefully go down to this fair value gap down here, which is take profit 2. Alright, so let's go back to the 1 minute That green line is the entry. We'll take a trade if it hits that entry. Green line hit. Let's get in. I'm in. Okay, so now this is take profit 1, take profit 2. No, take profit 1, take profit 2, take profit 3. Let's shoot for take profit 2. Negative $28. Let's see, take profit 2. Confirm. Which is $49 if it comes down to take profit 2. As you can see, just bounce off this fair value gap right there. Close it out at take profit 1. It's $20 in. 16, 22. Take profit 1 has just been hit. What a great tool. What a great tool. Take profit 2. That's a $49. Let's see if it hits it. Okay. Typically what I do is put a stop loss right in this general area right here to secure some profit, but if you're not fast enough, you won't be able to get it. So let's go ahead and close out the trade for a $25 profit. All right, so I could have held on to it, but I wanted to show you guys that, you know, pip juice is a phenomenal tool. So if you learn how to use it and you plot it out on your chart, you can walk away with a bag. So that's pretty cool. All right, so it's about to hit take profit 2. I should have held it, but it's okay. A win is a win is a win. Sometimes you want to, you know, grab your bag and keep it moving. You know, you could have made more, but look, I could have made more, but sometimes it'll gap up and you're like, oh, I just lost my profit. So the minute you feel like, you know, you're in a win and you want to secure that profit, by all means, secure the profit. Because I was going to set like a stop loss like right here. That way, if it does go back, then I would have secured the profit. But it happened so quickly, I wasn't able to, you know, put those numbers in. Because now it's heading to TP3. Look at that. TP3. Okay, so I don't really, well, see, there's your reversal. Boom. See how quick it reversed? Wow, look at that. Unbelievable. See, and now it's a bullish engulfing candle. Now, that trade that I just placed was a sell trade, and I went against the trend. Remember, the trend is bullish, but because of pip juice, and it plotted out where to enter, I went ahead and entered on the green and secured a profit right when it went past TP1, which is pretty cool. Alright, so hopefully you guys are getting some value out of this video and you're encouraged enough to say, you know what, I need pip juice. You can go ahead and click the link in the description area and go ahead and sign up for the Academy with a CashX, and then you have to add pip juice as an indicator. And once you do that, you'll be able to plot out your charts the way I just did, and you can take trades based on what you see. So if you need help or if you got questions, let me know. and I'll do like another tutorial on that. But there are tutorials inside of a Cash Axe that you can watch, and it will teach you, okay, how to use PipJuice. And once you become a student, get with me, because I need to send you a copy of when to actually use PipJuice based on the actual sessions, because there's Asian session, London session, New York session, and the chart has the time frames to actually plot out PipJuice. So I'll send you guys a copy of that, absolutely no cost, once you become a student of a Cash Axe and you add PipJuice as an indicator. So yep, so I mean, we still got time. We're 10:22 within the trading session, so it looks like the market doesn't want to reverse at any time soon. But I was able to secure what, 3 profits, right? The first one was a loss. The 2 after that were wins, and this is the 4th trade, which was a win. So 3 wins, 1 loss. Not too bad. But I'm gonna clear all this out here, and that would be, I'm gonna do it manually. Because it hit TP1, TP2, and TP3. Awesome. Absolutely awesome. Should have held on to it to TP3, right? But there's no guarantee. There's no guarantee. So here's a candle that's telling me that the market's going to reverse. Okay, so let me take off the fair value gaps. Okay, so where would be the market structure shifts? Well, above this candle here. I'll make that blue. Well, okay. Or, see, there's a reversal going on right there. That's your reversal candle. It's also a fake out. Look at that, because this candle did not go above this black candle on the left, so end up faking people out. So I'm not going to mark this up, not yet anyway, because as you can see, it didn't close above this candle to make it a true bullish engulfing candle. Instead, it's still going down. Wow, it's going below. So be careful of its fake outs. That's a fake out right there. Wow. Alright, so let's look left to see what's going on. Alright, we're going to take off PipJuice real quick. And see what's going on. See, a lot of people are just selling. It's a seller's market right now. Those who own the actual pair at the top are selling and trying to make their profit. So it's a seller's market right now. But at one point it's going to reverse. So let's see. Let's see a fair value gap right here. This wick and this wick. And let's stretch that out. Okay, and any more fair value gaps down here? There was one right here, but it's been mitigated already by this wick right here. It came and filled that gap and went back up, but it left a small little gap there. Probably why. It's filled. It's filled. So if that's been filled, things can happen. Good things can happen. Let's see. Okay, so here we go. We have a market structure shift that happened right here. All right. Now I anticipate another market structure shift happening above this candle here. Because this bullish engulfing candle engulfed all these candles here. So if it breaks above, this one. Okay, so that candle's bigger than all the other candles right now. It's a bullish engulfing candle. But again, it still didn't break above here. But this area now is considered demand zone. Alright, so, and it's going right past it. Wow. Coordinates. Look at that. Blowing past demand. Okay. So these two lines was liquidity, so it went down and touched and grabbed some liquidity. So no trade. Alright, so it went lower. I broke another low. Right there. Make it red. Alright, so here's a doji candle. Let's mark it up. Remember my strategy? If it goes above the doji candle, we go in for a buy. So I'm going to go in for a buy if it closes above and see what happens. We're going to get in right now. I'm in for a buy. I'm going to set my stop loss below the doji. This will be my stop loss. Let's get its coordinates. And place it in here. We're already up a couple of dollars, $6. Stop loss right here. So if it goes in below, it stops me out right there. Where don't lose that much money. So it says $84, but hopefully it continues its journey going up. Okay. Liquidity. Might not be a winning trade. Let's see what happens. -46. If it goes any lower, I'll probably just close it out. not gonna let it hit my stop, it's too low. So it's hovering around here. Okay, so negative 25, 19 seconds. Negative 6. Okay, so we are in negative 15. And look what's going on. It's going sideways. Didn't anticipate that, but it is what it is. Hopefully we can go above this area. And this is what I told you. It's like once you place a trade and the market's in a sideways position, it goes up and down, up and down, up and down, and you just look at your profits go up and look at your profits go down. Ugh, it's a nerve-wracking, but hopefully it'll break out. And that would be the box right there. Okay. Yeah, it's coming after my stop. 52. 48. 50. Hopefully this candle closes as a doji. Seconds, 16, 15. Right now I'm just setting and forgetting it right now. I'm like, okay, 25,504. Oof. It's going down. It's going to hit my stop. Yep. Hit my stop. I can get back in because for some reason it's just on a tear, a journey to go down. But I don't recommend ever doing this, because when you do that, this is what happens. You start losing money because the market's like, I stopped you out, I'm gonna stop you out again. And now my account's dwindling down, so I may close this out as well. But let's see if we can get to the next low. Where is the next low? Oh, down here. Okay, so this is an area of interest. So let's see if the market will come down to that area. Look left. Oh, okay, this is where liquidity was sitting. But yeah, this is what not to do. Horrible, but it is what it is. Let me just close this out. Whenever you make bad decisions, you can always close it out, learn from it. Okay, so as you can see, it went down and grabbed my stop, creating a bullish engulfing candle. What time is it? 10:35. If this candle closes bullish, I have to close those quarters out. Yeah, I gotta close those out and get back in. $113. So we close those out and we're gonna get back in. That was a bullish engulfing candle, which is a reversal candle. So let's see. Hopefully we can get back to where we were. whiplashing me. It's taking me for a ride. $120 negative. Ugh, this is horrible. This is not good. Well, you guys get to see this live. What time is it? 10:36. I'm still bullish, so hopefully this is a reversal with this bullish engulfing candle. Because if it reverses and goes back up, not only would I make my money back, I would be on an upward trend. So this could be a good thing. Because the reversal happens, market structure shift now will have to be over here. This is the market structure shift right here. Okay, that's the market structure shift. I am now up. I don't know why it says negative. Something's wrong with the system. See, positive 20, positive 16. Oof, what is this? It's supposed to be short. I thought I closed that out. Unbelievable. That was horrible. Okay, which is fine. That's strange. I thought I closed that out. See, mistakes do happen. Huh. I'm in for another trade because it actually broke that area and it created a fair value gap, so it's got to come back and fill this gap. All right. But I'm golden. That's good because the market needs to come back to these areas up here, which is excellent. So I'm sitting pretty, not only making my money back, but I placed another trade in. So I'm up 180 bucks, back up to past 500. So what was I before? $523. So I am nice. It's working out. It's working out. Okay, because I put this blue line here. There's another area of interest. See, it's coming back to touch that fair value gap, which I anticipate it to do. Bounce off this fair value gap and then go higher. So just a matter of time now. And what time is it? 10:39. Plenty of time for it to go right back up to those higher highs. Okay, and this is all from just reading the candles because of that bullish engulfing candle. That's why I encourage you guys to read the Bible Stick Candle book, because I saw that bullish engulfing candle. I got back into the market. I went against my rules, so I hope you guys realize I just did that, where I was supposed to wait for a reversal, right, an upward trend, because it was going down. I got in some trades to try to capture some pips going down, which I should have never did. But now I'm back on track, and I'm excited to the point where now it's going back up where I want it to go. So once it breaks these highs, I mean, the profits are going to get larger. I'm way past $523. So if I wanted to close out the trade, I would have made more money than I started with. But as you can see, I'm not going to do that yet. I can close out some of this, but no, I'm not going to do that. Because now that it's going in my direction, I'm going to hold off, wait for it to come back and hit the fair value gap, bounce off, and go higher. So let's see if my prediction comes to pass. Okay, so it may not even come down this far, because the market does a lot of manipulating, and it may just continue its journey higher. So I'm up $260, way past $523, which is nice. And you guys are watching this live, so this is pretty cool. I'm glad it was able to reverse on me. I'm up $302. I'm above 25,612. So I may close some out, but I will move my stop loss. I actually didn't set one, but I'm going to secure some profits. Maybe right there. Okay. We'll wait for this candle to close, and I'll probably put the stop underneath that candle. Okay. So as you can see, it's whiplashing. It's like, do I want to go up? Do I want to go down? Do I want to go up? Do I want to go down? So I'm still up, which is good. I'm just waiting for this candle to close. 28 seconds. 26. So depending on where this candle closes, I'll place a stop loss underneath the candle. That way I secure some profits. See? Look at this. as if it knows what I'm about to do, right? You ain't putting that there? Unbelievable. We were up 300, now it's like 197. But we're just gonna wait for this candle to close, which it just did. Okay, so it came back down and hit this area of interest. So, which is good. Bounced off, and now it's got to close above this blue line. So let's hopefully it does that. We're back up to 300, 286, 270. Nerve-wracking, because now it's going sideways. Let's see. Okay, so I may just close it out just to be on the safe side. I wanted to go above this area here. As soon as it does that, I'd love to put my stop loss right at that line. If I can break it. 308. It's whiplashing. You know what? I'm going to take my profits. This one, 106. This one, 73. And we'll keep one runner. So I'm still above $523, which is good. So wait for this candle to close. And we'll put a stop loss right underneath that candle. Do that now. As soon as I put it in, it's going to hit it, I bet you. As if it knows. See? It's coming down. So you know what? There you go. Boom. Had I kept the others, it would have been golden, but it's okay. Because I am going now to close it for $123. Right there. 133. Bam. That was a winning trade. Could have kept it for longer, but again, don't be too greedy. Don't be too greedy, because look, there's a fair value gap right there. And what can happen is that it hits a fair value gap and comes back down. Okay. So, what time is it? 10:45. Not bad. We actually are above $523, so we actually made over $100 on this trading session, which is kind of good. So 25,626.90, which is really nice. Okay. Hold on one moment here. Okay, so let's continue to monitor this, because because it's not 11 o'clock yet. So got another 14 more minutes. So will there be another opportunity to get into a trade? Well, since we are now bullish and we broke structure above this blue line, there might be an opportunity to get back in. But I'm waiting for it to come down and bounce off one of these fair value gaps, and let us plot out with this tool, which is the fair value gap indicator. I'll put it on the chart and see where the green fair value gaps are. Okay, so this is not a fair value gap, so we'll take that off. Okay, so we have one that I marked out earlier, which is right here, right up until 11. There's another one down here. We'll mark this one as well. Okay, so if the market comes back down, it's up here, right? If the market comes back down, there's 3 levels it can bounce off of. This one. This one. This one. Or it may not bounce off another one. I tell you, because everybody's waiting for the market to come back down so they can place a buy order. And trust me, the market makers know that. But whenever you see a gap, it's because what they did was they forgot to fill all the orders in these gaps. So technically they got to come back down, get the remainder of these orders to go back up. Okay, because there are liquidity zones in these areas, and I'll show you where they are. There's one right here. There's wick. There's a liquidity zone. Right there. And there's one. I'll clone that. Where'd it go? It won't let me do it. Okay, I gotta do it manually. There's another zone right here. Okay, those are all the liquidity zones. Usually you'll see liquidity right before or above a fair value gap. So the market, has to come down and pick up all these orders down here to continue its journey going upward. So we will monitor this. Will it happen before 11 o'clock? I doubt it, because there's like 11 minutes left before 11. But if it does come back down to these areas, I'm going to personally get back into the market and ride it all the way back up to this blue line up here. Okay, remember, trading is risky. Do not trade with funds that you use to live off of. There'll be a disclaimer somewhere. I'm going to pop it up on the video. That way you guys can read that and truly understand that, there are risks involved. You have to teach yourself how to read the charts. That's half the battle. Once you understand how to read the charts, you're halfway there. Once you understand the candlesticks, you're halfway there. Once you understand these patterns, you're halfway there. So there's a lot of things you got to learn. Candlestick reading, where to plot out your fair value gaps, and look at this. There's a candle right there called a doji candle. That's your doji candle, and it's plotting below it, so that means it's going back down. So I can get into a trade and try to ride it till it hits one of these fair value gaps, but I'm not gonna do that, because last time I did that it faked me out. So I'm gonna wait for it to come down on its own, and then if it does come down to my fair value gaps and it doesn't pass it, right, because remember, it could pass your fair value gap and continue going lower. So you got to make sure there's a bullish engulfing candle that comes out of the fair value gaps before you take your trade. Okay, so that's really, really important. But this would have been like a really good trade to take had I've taken it. But again, I'm going to wait. Okay, I'm going to be patient and not trade against my trading plan, not go against the trend. Because remember, the trend is a bullish trend, an uptrend. Right now it's just retracing and going back to fill those fair value gaps. So just a matter of time before it fill those gaps. And once it fill those gaps, typically it has to come back up. It doesn't necessarily have to, because nobody knows the future and we don't know exactly what the market's going to do. So as you can see, look, 2 down candles, and then it did not come down here. Eventually it will, but this was another fake out. So if I would have got into this trade, I would have got faked out, because now look, it's creating a bullish engulfing candle, which is bigger than the previous candle, and now I might even go higher at this particular point and just ignore the fair value gaps that are down here. So that's why you got to understand the candles. Okay. So we have now 8 more minutes, about 7 minutes and some change, and we're just gonna watch it and see what happens. And I'm gonna close this whole live trading session down at 11, and not take any more trades after that. And I'll probably go work out or do something with the rest of my day, and then come back on here tomorrow. Leave in the comments if you want an invite when I actually start doing this process. I usually do it, I jump on here at 9 a.m, make sure I mark up everything, and then at 9:30 I look for the 1 minute trade, which is in and out. Today's 1 minute trade really didn't bounce high enough for me to be really excited about it, because usually during a 9:30 open and you're trading NAS 100, which is 100 of the top companies in America, if a handful of those companies, and I'll show you a list here, if a handful of those companies, if I go to my setups, I do. Indices. Okay, these are the top companies that are part of the 100 listed companies in NAS 100. So whenever you see these companies are like up, meaning they're flashing green, meaning they're up, then NAS will probably go up. If they're flashing red, that means NAS is going down. So it'll do, if all of them are green, then NAS is pumping higher. If all of them are red, NAS is pumping lower. Should have had this up earlier, but I was reading the charts. This is just another confluence that you could use to determine which direction the market's going. So you got Apple, you got Amazon, Google, Microsoft, Netflix, and Tesla. So these are the top performing stocks within NAS 100. I need to take off this US 30 because I don't trade US 30. Okay, so so that's it. So that's pretty much another gauge to look at. But what do we have towards the end of this hour? We have sideways movement again. So again, if I would have took this trade right here when I saw this doji candle and got in at the end of it, number one, I would have been stuck in this consolidated event right here. And again, we already witnessed that. It was disastrous. But I did come out a winner. Okay, I grew the account from $25,523 to $25,626, which is an increase of about $103. which is really nice. So again, my goal is 27,500 for this account. Once I do that, I would pass phase 1, and then I would get a live funded account, because this is a 1-phase challenge. Just got to prove myself, and once I prove myself, they'll reach out to me and say, congratulations, you now get a live account. And then we do the profit split with them, right? I got it where it's like an 80-20 split, and then that's when I really become very conservative. I manage my trades with precision, and I don't try to overtrade or take risky trades that you just saw me take, which was disastrous. I lost, and then I won. I lost, and I won, then I lost. Don't ever do that. Don't recommend that. But it went in my favor, which is really nice, because remember I said I was looking for a bullish trend, and I found the bullish trend, bullish momentum. I got the bullish momentum, and I just got, went against my trading plan and started trading against the trend, which is ridiculous. You don't want to do that. But as perfect as we try to make this thing, manageable, you're always going to go against your trading plan. Try not to, because that's all the psychology of it. It's like, revenge trade. I want to make back the money I just lost. Try not to do that. I did it. You witnessed it. I'm not perfect. A lot of these traders are not perfect, and you're not going to be perfect. But know this: if it can happen to me, it'll happen to you. You just got to manage your emotions, manage your strategy, manage your principle. Risk management is always important. You saw me set stop losses, it hit the stop loss. You saw me set take profits. I closed it out before it actually got to a take profit, so I could secure some money. But then I didn't set any take profits, and I didn't set a stop loss, because it ran straight up to over $300, which was really nice. And I was able to close that out before it started going back down, right? So that's why I was able to come out with a win. So you hands-on, you gotta be proactive, you gotta pay attention, you gotta be quick, because it didn't even let me set a stop loss sometimes. And you just gotta plot out stuff. It's all about predicting. It's all about understanding the numbers. It's all about reading the charts. It's all about understanding the candles and things of that nature. So, a very good tool to use was the pip juice, which is with an indicator. Buy a CashX. You can only get it through them, because it's only sent out to the students of a CashX. So become one now, and then you can always get the other indicator, which is a fair value gap indicator. It's a list of all my indicators. See, pip juice is locked. You can't get it without becoming a member of a CashX. But fair value gap, and get this one, and it'll plot out where the fair value gaps are, and then you would plan your trades based on the fair value gaps. Okay, so I'm going to continue to watch this, but guess what time it is? 10:59. 10:59 is about to be 11 o'clock, and that's where I shut everything down. No more trading for the day. I'm done. I was able to walk away with the bag, which is more than I anticipated. I thought I was gonna make less than that, but I'm $100 closer right, towards meeting that funded goal. All right, so with that being said, thank you guys for watching. You guys are awesome. Hopefully you see that this is not easy, okay? But at the same time, if you have the skill set and you understand what you're doing, great things can happen. So, get involved, stay plugged in, and I'll see you on the next one. Take care. Bye.